Hello, everyone. Thank you for joining the LNY Tax Advisor podcast today. My name is Dr. Jake Latimer. This is my partner here,
Rick Yancy.
And we're just very thrilled that you guys are here. And we're going to talk about various different tax topics and a lot of topics that are going on in today's society. But before we start off, we want to kind of tell you a little bit about our firm and what makes us different, because I think it's very important, you as the end user, as a taxpayer, to make sure that you have the right partner in here. And, when you're looking at someone's proposal, their estimate to do work for that, you need to really be able to compare apples to apples and not comparing apples to oranges, Rick.
Yeah. So this is, every tax firm has their own way of pricing out the way they do things. But for the consumer, one of the things that they need to keep in mind is that you really need to look at the underlying value of what you're being provided as far as the services. Are you really only getting a tax return?
Yeah.
Right. Well, if that's really all you're getting, then yeah, cheap is better, right? So if you're doing TurboTax, you're doing an H&R Block online, or just going into there, and that's all you're looking for is just a quick tax return, then yeah, absolutely go the cheaper route. But if you're really looking for some value add, if you're looking for someone that can provide you that tax planning, that some guarantees on the tax return themselves, you really need to go with a more substantial firm like LNY that can kind of back the service that we provide, right? So, just name a few things. We provide audit protection for up to 3 years, right? Well,
explain that to me. What exactly do you mean with audit protection?
So H&R Block kind of does this. They kind of promoted this early on in their business, but one of the things that their service used to only provide was just 1 year. It was 1 year of audit protection. So if that tax return ever got selected by the IRS, they would kind of defend it, right? More or less. But how were they defending it? Who were they outsourcing it to? That was kind of the unknown. And were they real clear about what it was guaranteed on? And they actually got sued on this a couple of years ago, because it turns out that protection wasn't everything that it was. We provide a comprehensive audit protection for up to 3 years on every tax return that's filed. Okay. And that's both. It can be for personal, it can be for business. And so that means that if you are selected for an audit, we will provide service-free communications with the IRS to handle that audit. Okay. Right. And that's what that means. Now, does that mean we cover your taxes? If there are additional tax assessments done, penalties and interest, we do not cover those unless it's an error on our part. Right. But if it's like you forgot to give us a 1099 for some extra income, or you forgot to tell us about this brokerage account that you have, those are your taxes to remit. But we will work with the IRS to keep those penalties and interest down as much as possible. Again, that's all free of charge. You don't get charged a dime for those services. That's what that audit protection is going to provide you. Additionally, we can also provide you some state coverage if you have, say, a Louisiana. Maybe you went over there and did some gambling and you forgot to remit your taxes over there. You went to Oklahoma. We can also provide you some state coverage as well. But that's one of the many things that we can provide here as an additional services that not a lot of practices offer with their returns.
Yeah. And one of the things I think that also sets us apart, and I think that is very much needed in today's society, is the identity theft protection for the first year.
Yeah.
That is huge, guys. So if your identity is stolen, and it doesn't have to be directly correlated with your tax return, any issues that you have with identity theft, for 1 year after we file that return, we have a program and a system in place with someone that we broker with, that we work side by side with, that is an industry leader that will, resolve any issues and help get your identity resolved for any mishaps or any things that happen.
Identity theft and fraud is becoming very rampant.
It is.
And most people don't understand what this can mean is if someone gets a hold of your social security number, they can file a fraudulent tax return and get a whole bunch of refund money from the IRS. Now, the IRS does a really good job of kind of figuring out whether this is real or not, because if the return doesn't match the documents that they have on hand as like a W-2, because they have a copy of that already filed with them, or 1099s, if they're not seeing those things, they'll automatically reject it. But with AI and some of the sophisticated things that are out there, people are getting better at creating these fake returns and creating huge refunds that then come back to them. And I can't tell you the number of centers. There was a big one a few years ago in Florida that had thousands of returns that were being generated out of just like a call center that people were just filing these fake returns. And that's a massive amount of fake money that's being brought in from the federal government. And here's the thing. If you don't know about it, you could receive a notice in the mail from the IRS that says, we need our money back.
Yep.
And you have no idea that this return was ever filed on your behalf.
Yeah, and I want to back up just a little bit on talking about the audit protection, Rick, because as you alluded to, it's a 3-year statute. We'll cover you for 3 years.
Yep.
Realize, guys, that it's not just the audit protection. It is also any notices or any things that come up on your account. And understand, and I know what everybody says is, well, if I'm not doing anything wrong, I don't have anything to worry about. But the IRS is notorious for making mistakes.
Yes, they are.
We had a client reach out to us the other day that made a $10,000 payment.
Yeah.
And for whatever reason, it hadn't shown up on their account. But if they have audit protection, guess what? We can go back and forth and figure that out for the client, and it doesn't cost them any additional man hours. And I will tell you that doing this for, probably close to 20 years now, that the amount of time that's involved on resolving a case with the IRS can be quite substantial.
Yeah.
I can't tell you how many times that we would call in, and upon calling in, either their system is down, you can't talk to an agent because their system is too busy.
Correct.
You have a dropped call. They have to escalate it because the person you first speak to is just, not qualified to handle that at the time.
Yep.
And so it is a very long and drawn out process that gets very costly for the customer or for the taxpayer. So we highly recommend, and in fact, we made this part of every individual return that we do. It's just part of it, no additional cost. But like Rick was saying, if you want it on your individual state return or a business return, you can get that as an option.
Yeah. Yeah. The dealing with the IRS can be a pain in the butt. I know Trump has just recently enacted through one of his executive orders returning as many government employees back into the office. But that's right now, the IRS, 90% of their workforce is working from home.
Yeah.
Right.
Yep.
And they're on modified hours. So they're not working full time. And so getting someone on the phone and dealing with an issue can be very time consuming, whether you're doing it yourself or you're having a professional do it for you. Mm-hmm. And if you're having a professional do it for you, that time can ratchet up very quickly. Yeah. That you're being charged for.
Oh, yeah.
And so having these protections in place so that you're not being charged these extra fees are very important.
Yeah, I mean, just to put things in perspective, I know Rick and our billable rate is $500 an hour, and I will tell you that if it is an audit, I've never represented a client that I didn't spend at least 10 hours.
That's right.
That's $5,000 right there. That's a minimum, okay? Obviously, if it's a notice or something, it might only be an hour or 2 hours, but still, that's $1,000, $1,500 easy just for a couple of phone calls. And every time we call when we're on hold, that's when the time clock starts.
Yeah.
So if you have audit protection, it's a safeguard, and we highly recommend it.
Absolutely.
In addition, one of the things that we do differently here, and I'll let you harp on it a little bit, is on the business returns, we include the BOI. Can you explain the BOI and the importance in making sure that those are being filed for the taxpayer?
Yeah, absolutely. So this has been battled around in the courts this last couple of months. We had a stay on it up through this last week from the Fifth Circuit. Mm-hmm. The Supreme Court has kind of stayed that requirement. And so BOIs are back on the radar for everyone. And what is a BOI? It is a beneficial ownership information form that's filed with the Department of FinCEN, Financial Security Crime Center. And what they're doing is they're tracking basically every company in the U.S. And what that means is every company's filing this information report of who owns them, where that person's located, and every time you make a change to that company, an update to that filing has to be done. Mm-hmm. Okay. There are some significant penalties if you don't follow it on time, make the changes correctly. We provide those filings as part of the business returns. So when we do a business return for you, it's just a covered charge as part of that. Most firms are not doing that.
Yeah.
They won't even do it for you.
Yeah.
And if they do, it's an additional charge. Ours is included in our pricing.
Yeah. And I just want everyone to understand that is the proactiveness that LNY basically encounters every day for our clients. I can tell you that our firm is pretty active on tax Twitter out there.
Yeah.
And as Rick was alluding to, just moments ago, I would probably say the numbers out there as far as on a national level, maybe only 35 to 40% of firms even offer that service.
Yeah.
And of those, I can tell you that maybe one or two other firms nationwide that I have personally seen have it included in their price.
Right.
It's always an additional cost.
Yeah.
And you don't have to worry about that because we don't want to nickel and dime you. So that's why we make it part of the return.
Yeah.
Same thing goes for property rendition.
Yeah, property tax renditions or your franchise returns if you're here in the state of Texas.
Yep.
We will absolutely cover those as part of our fees. We'll make sure that they'll get filed on time and you're covered. If an extension is needed for either, we can make sure that those get filed. And then, as far as the TFTRs, with the new rules, they're a whole lot easier to file if you have a no tax due, right? It's just your PIR that's required.
It is.
But they still have to be filed
every year.
And they have to be updated for member changes and things of that nature. So we absolutely take care of all of that. Again, free of charge. It's just part of your business tax return.
That's right. It's part of our white glove services, like we like to say.
Absolutely.
Another thing that I think that really sets us apart, and I actually don't know anyone else that does this, is our proactive client support by calling in quarterly to check in on our clients, Rick.
Yeah. So that's something we implemented this last year, and that is every one of our clients gets called once a quarter, and that is purely just to check in. Hey, how are you doing? Is there anything we need to talk about? Is there anything that you're concerned about with your taxes or just your business in general that we can assist you with, right? And if you escalate it and you say, yeah, hey, business is going great and I'm worried that I'm going to have a tax issue this year, that immediately triggers a meeting. We need to sit down and plan that out with you so that by the end of the year, we've taken care of everything. Our goal is that by the end of the year, your tax return is just a report card of how you did. And it reflects your knowledge of how the business performed. There shouldn't be a single surprise on that tax return. And the way we handle that is by doing these quality calls with you so that there are no surprises. If your tax preparer is waiting till the end of the year and that's the only time you're meeting with them, all you're going to do is have surprises. Yep. Why didn't you tell me this was going to be a problem? Especially with tax law changes. A tax law change occurs in the middle of the year and you're not informed. That can be a huge impact to your business.
Absolutely. That's a problem. Another thing that we offer here at our firm is we have a quality control liaison. What does that actually mean? Well, that means that if any issues arise, if you're not happy, if you need some additional services maybe that aren't being provided, you have a contact number of someone you can call immediately to get that escalated. That way, if Rick or myself are out of the office, we have a dedicated individual that handles that for us in-house.
Yeah, and that for us, that's very important because we want to know, are you happy with what we're providing?
Exactly.
Right? And if you're not, we want to know why so that we can get better. It's a continuing improvement process, right?
Yep.
And I'm a big believer in that. And this is where I think a lot of firms right now fail their clients.
That's right.
It's a set it and forget it. I kind of get in my groove and I know how it works and I don't change anything. We are an evolving economy and we're in an evolving business structure. We have to evolve with our customers. And if we don't, our customers are going to be unhappy and they're going to go look for other services.
That's right.
We never want that. We don't want anyone to ever leave here going, they didn't evolve with my company.
That's right. That's right. Well, you mentioned on the front end about the compliance side of things. And I always like to say compliance is the easy part, or should be the easy part if you're qualified, right? With that being said, one of the things that we do a little bit different here is we have we're proactive with our tax advisory.
Yep.
Realize that's an extra selected service. Obviously, it's not everybody's cup of tea. It does come at additional cost. However, this is designed to help save you tax dollars and basically improve your financial outcomes. And with our tax advisory program, we guarantee the work that we're doing for you.
Yeah, absolutely. And this is honestly, if you're a growing business and you see yourself climbing that tax brackets, maybe right now you're doing okay, but you see with the changes in the economy that you're starting to pick things back up and you're going to maybe go up $100,000, $200,000 in just net income back to you. And that's going to generate you going from maybe your average tax bracket is somewhere around the 15 to 18%. And now you're worried you're going to be well over the 20, 21%. You need to get with us because we can start doing some things like restructuring. We can look at tax planning, looking at
cost segregation studies,
credits.
Yep.
This is all part of the strategy things, but those aren't included in our basic tax packages, right? This is an additional service, but we guarantee the work,
correct,
right? So you pay us money if we don't save you that back or help you grow your business in some kind of commensurate process, we offer 110% money back guarantee on
the difference, right?
That's
Absolutely.
right.
Yep. Touching just a moment ago about data breaches and things of the sort. One of the things that I think that makes us special, and everyone's seeing these data breaches going on across the country right now and across the world, actually. But we don't disseminate any information, any of our clients' information to anyone. We don't sell it to a third party.
Nope.
We don't communicate any of that information. Nope. We take protective measures to make sure we have encrypted software that protects your data from you.
Yeah.
We have RAID backup systems in place. Rick, you want to kind of hit on some of the stuff with Onvio and all that kind of stuff?
Yeah, no. So we use Thomson Reuters products called Onvio, and that's our document storage system. And Thomson Reuters is a huge Fortune 500 company. Yep. They service not only the accounting field, but the legal field. So they're very well aware of the need for data security. And it's got multi-factor authentication in it. It's got biometrics in it. And so it's one of the more secure systems out there. But on top of that, that company itself has its own cybersecurity policy. So if they ever get hacked, they're going to cover it. They're their own insurance. Okay.
Yep.
This is in this day and age, cybersecurity is huge, and given that we handle your taxes, your information, your social security numbers, your addresses, your kids' information, all that's got to be locked down, and that is why we utilize third-party softwares that are going to protect your information from any kind of significant data breach.
Yeah, I mean, look, guys, this is cutting-edge software that we utilize. It's quite expensive. I will tell you, it's quite expensive, but you get what you pay for, right? And for us, we've never had an infraction, and I will tell you that we're not going to start now.
Yeah.
Okay. We're going to make sure it's done right and done right the right way, and we're going to protect your data and protect your information because we care. And who is ever doing your taxes or doing any advising for you, they should care as well. They should treat it as if it's theirs, and that's how we handle all of our clients.
Yeah. So the old way of doing things is kind of gone. It used to be everyone saved everything on a local server, right? And you could VPN to that. That's going away, right? But there are still firms out there that do that. They still take people's information, they'll scan that document, save it on a local drive.
Yep.
That's highly inefficient, one. But two, it opens you up to having your data stolen, because all it takes is a good hacker to go from the outside and log into that server, and they've got access to all of your documents.
Yeah.
Right.
Yeah.
That's why we utilize these third-party softwares, because it's cloud-based. It's not on our local server. We can't be hacked. So your risk is minimal. And
it's industry leaders is what we use.
Absolutely.
One of the things that we're a little bit different than other firms as well is, we offer a comprehensive business and tax advisory services where we offer multifunctional services for you, like, for instance, in-house bookkeeping and payroll to go with it. I know that, unfortunately in our industry, the notion of a bookkeeper has kind of a negative connotation in regards to the value. But I will tell you that, your tax return or your filings or your advisory is driven solely, especially if you own a business, is driven solely on clean financials.
Absolutely.
And so, from our perspective, it starts there at ground zero. So we need to make sure that your books are clean, that we understand what's going on. And then from there, then we can start advising, then we can start planning. And so we recommend all of our clients to let us handle everything in-house. That way we can see it through the whole process. Oftentimes when you have too many, well, like I like to say, too many hands in the kitty, it becomes this blame game, right? Yeah. Like, so if a mistake or error or omission occurs, well, this was booked incorrectly, or you didn't provide this to me in adequate time. That's what we've seen with so many other firms. They would have a bookkeeper over here doing this, and someone else do their tax advising over here, and then someone else over here doing some financial plan or CFO services. And then on the back end, then you'd have your tax compliance. Well, the good thing about us is we have everything in-house.
Right.
So we're making sure we're in constant communication with our staff members in the back. We facilitate and we leverage off what they produce, and we sit down and communicate with you. So like Rick was alluding to, that report card that tells a story, that tax return tells a story, right? It tells what your income items are. It tells where, if it's a business return, it's going to tell you, what assets you have, what liabilities are the short-term, long-term. It's going to tell a story. And so from Rick and from my perspective, we like to break those down in layman terms so you can understand what's going on in your business as well. And then we can start giving advice and key decision going forward like fractional CFO services, Rick.
Right. Well, and I'm going to harp on that a little bit because, I've had a couple of meetings just this week with new clients walking in, right?
Yep.
And they've done either the bookkeeping themselves or they've hired a local just bookkeeper,
yep.
right? And both of the clients that I met with had the same issue. The bookkeeper did the information, just took the bank statements and all that, compiled some financials. They did the tax return, and they looked at the tax return and they're like, we didn't make this much money. Well, where'd the money go? Well, they were missing assets, cars, vehicles, computers, equipment that was bought, and none of that was ever translated to the bookkeeper because
right.
the bookkeeper didn't ask.
Yep.
Right.
Yep.
And then it wasn't translated to the tax preparer because the taxpayer didn't ask because they just took the financials that were given to them. And this is why it's very important that you have somebody that's not just a bookkeeper, because honestly, most bookkeepers out there, they don't know accounting. They know QuickBooks.
Like I like to say, data manipulators.
They're data manipulators.
Yeah.
They know how to pull a bank statement in and a credit card statement in and throw it all together and create a financial statement.
Yeah.
And it may or may not even be accurate.
That's correct.
Okay. You need someone that can look at a set of financials and then knows your industry and can go, you're missing insurance expense. I know you have to have general liability insurance because you're a pool company. I know you have to have this.
Yep.
You're missing auto expenses because you're a plumber and I know you've got 10 vehicles sitting out there.
Yeah. Yeah.
Where's those cars at, right? You need someone that can actually do the thinking and isn't just going to be a data manipulator and take your bank account and go, here's your financials. So that's number one. On the fractional CFO services, this comes back into our advisory stuff, right? It's very important. Okay. We can offer a CFO for anybody. It's really for that person that wants to take their business to the next level.
Yeah.
They've run their business. It's done okay, but they realize they're hitting this barrier. They're spending too much time doing the back end of the business of trying to keep the books in order and doing X, Y, and Z. And they're not outgrowing their business.
They're working in the business and not on the business.
Correct.
Yeah.
And so that's where you need someone like us to come in and go, you be the CEO, let us be the CFO.
Correct.
Right. And so we can come in, we can look at we can look at banking relationships. Do you have the right bank with your company? Okay.
You have the right vendor list.
Do you have the right vendors?
Yep.
Have you negotiated with those vendors? I'll tell you real quick, just meeting I just had. First question I asked them was, how are you paying your people? And they were like, well, they're all 1099s. I said, are they 1099s? Well, that's how we pay them. But are they? How much control are you exerting on them? Mm-hmm. And they're like, well, we don't understand that. So I walked them through the 1099 versus employee questionnaire that the TWC is going to ask when they come in and audit you.
Right.
And they're like, no one's ever asked us these questions. And I was like, that's a problem.
That's a problem.
Okay. Because they were providing cars to their employees. They were providing shirts with the company logos to the employees. They're employees. These are not 1099 folks.
They are.
And TWC gets a hold of them. They're going to owe payroll taxes, penalties, and fines for misclassifying those employees.
And I can tell you from a business perspective, Rick, you know this. We talk about audits all the time, right? For business audits. And I will tell you that payroll audits, whether that be federal payroll audits or TWC audits, are much more likely than a 1065, 1120, 1120S.
Right.
And so, like Rick was alluding to, you better make sure that you got your shit in order, okay? Because if you don't, I promise you, they're going to nail you. They're going to nail you to the wall. Seen it too many times.
Yeah. And so that's why you need someone that can come in and take care of all of these things outside of just your basic compliance issues.
Yeah.
You need someone that has the business acumen that we've got that can come in and go, okay, where are you open? Where are you susceptible to any kind of an issue? Let's look at your general liability. Is it sufficient for what you're doing? Mm-hmm. Do you have business interruption insurance? If something happens, I'll give you this as an example. We have a client last year. All of her income is derived from insurance claims. She's a therapist. Okay. Last year, we had a major cybersecurity attack on the entire insurance industry. They stopped paying claims for months. Her business went to crap because she could not get income in because the insurance companies weren't paying.
Yeah.
She did not have business interruption insurance. And it's something I had been harping with her. And it finally dawned on her, this is why I need this.
That's right.
It could be any kind of situation that's completely out of your control.
Yep.
Hurricane comes in and blows through and your entire area is shut down for a month.
Yep.
That's business interruption.
Yeah, and so what Rick is alluding to basically is our programs that we offer, they're not cookie cutter, right?
Very specialized.
They are specialized and tailor-made towards each individual, each business, and in their industry, okay? So Rick was just providing an example there, but we have a ton of examples of various different issues and things we were able to resolve with clients over that time. And I think the thing that's really key and allows us to do this, Rick, is, our firm is large enough we can handle these engagements. We can handle these small, mid-sized businesses that want to grow, right? We have the infrastructure in place. We're not one-man operations, right? That somebody works out of their house, little CPA, keeps their costs down. But the problem is they, in that role, that person is doing every little small thing from administrative stuff to billing to, you name it. They have to wear the hat because we all did it as well when we first started out. But, we have systems in place. We have the right personnel in place with the experience that we can help transcend and take your company to the next level. And for me, that's so much more rewarding than even just the tax savings, right?
Sure.
To being able to change lives and create opportunities and create jobs in the communities.
Yeah.
Part of this as well is the multi-layered review process that we have here that a lot of firms don't have, especially if they're one-man operation.
Right.
You want to talk about that for a second?
Yeah. So this is, look, I'm not perfect. Honestly, I'm not.
I'm pretty close to perfect.
Are you?
Just play.
Yeah. If I filed every single tax return, there'd be a mistake somewhere. Absolutely, there would be. You need people reviewing these tax returns because one person's going to prepare that return, another person's going to review it, and then another person's going to double check everything. And if you don't have that layers of review, something gets slipped through, and now someone's on the hook for a major tax issue. And we don't ever want that to happen to one of our clients. So at our firm, we have an accountant that reviews it. We have someone else, or accountant that prepares it. We have someone that reviews that work before it even gets to our level of top level review of signing off and it's ready for filing.
That's correct.
And if you're at a one-man shop, you're not getting that.
It's not possible.
No, it's not.
So that's why you got to be very careful because if the institution or the organization that you're doing business with as your accountant doesn't have the right people in place, doesn't have the credentialing, doesn't have the infrastructure, I promise you are missing out.
Yeah.
Okay. Another thing that we're a lot different than other firms as well is we're very transparent and we're cost effective with our pricing.
Absolutely.
That we have here.
Yeah.
This last year, we had unchanged pricing. We didn't even go up on our cost. And I can tell you, the ratio on tax Twitter across the nation was 11 to 19% or roughly 15% of an increase. We didn't even go up, Rick, on our pricing.
No, the only thing we changed was the additional audit protection.
That's right.
And it was $100.
We just we just make everybody, it's a requirement now.
Yeah. And that was it. That was the only change we made this year.
Yep.
Because we heard from our clients, they are struggling out there based on the economy. We didn't want to contribute to that as an issue for any of our clients. And so we decided this year we're staying the same.
That's right. That's right. And I think the thing that makes us different as well is we listen to what our clients want, right? And so we hear, right, like all other firms, when we have to, because everybody has to send engagement letters out there to basically engage with that firm.
Yep.
And we hear every year they got to sign the same engagement letters.
Do I have to sign this again?
So the thing that's unique about us, and explain to everybody what an evergreen engagement letter clause is.
So this year we're going to set this aside, and now you're going to sign an engagement letter that's going to be good for as long as you're a client.
In perpetuity.
Okay? In perpetuity. Now, does that mean there won't be other forms you don't have to fill out? No. Okay. But as far as an engagement letter with our firm, once you sign up with us, we're not going to ask you to re-sign an engagement letter every year. And additionally, we have one engagement letter that's covering all services. So every time you come back and you're like, hey, I think I need this. Perfect. We just get you to confirm with an email that says, this is what I'm agreeing to sign up for. You don't have to sign a new engagement letter for that because you've already signed up with our firm.
Yep.
Okay. There's a 30-day cancellation notice. So if you decide, next year you're like, you know what? I don't think I need y'all services. Maybe you shut your business down. You're like, you know what? I just don't need it going forward.
Send us an email.
Just send us an email, 30-day notice, and you're canceled. And that's all there is to it.
Yep.
Okay. That's going to make most people's lives a whole lot easier because now you're not sitting there going, why can't you start on things? Well, you still haven't signed the engagement letter. I can't start on your work until you sign the engagement letter.
Yep.
That's no longer going to be an issue. We're doing that with the engagement letters. We're doing that with our payment forms as well.
Yep.
The only thing that you're going to have to fill out on an annual basis is the client information sheet because we need to know, did you move? Did you have a kid? Did you get married?
Divorced? Yep.
Those are things that you constantly have to update us on. But outside of that, that's the only form that you're going to have to fill out for us. But if you're doing with any kind of tax firm, they should be sending out a client information or client organization organizer anyways. So you're going to fill that out anyways.
You have to. You have to. Let's talk about fixed fee payment schedules and how beneficial they are, especially to business owners.
Yeah. So I can tell you as a business owner, because we have to manage the business, okay? At the end of the day, we're business owners. Mm-hmm. The one thing that I hate is getting a surprise bill in the mail. Oh my God, the electricity this month was $1,500.
And if you didn't budget for it.
And I didn't budget for that, right?
Yep.
Some costs can be controlled. We know what our payroll is going to be on a regular basis, but some costs you can't. Okay, if you want to get into the macros, that's variable cost and fixed cost, right? Yeah. People love fixed cost. They like being able to plan things, and one of the things that we've decided is we're going to move away from the whole traditional hourly charge thing. Okay, so let's break it down. CPAs were notorious for copying what everyone else does. Okay.
It's a copycat game.
It's a copycat thing. So what do? We went out, we looked at what do attorneys do? Attorneys charge by the hour. So we're going to charge by the hour. Right. Okay. So we decided, so that's the way this industry's always run. We are moving away from that. We are moving to a pure flat fee arrangement with all of our clients. Your tax return is going to cost X dollars. Your bookkeeping is going to cost X dollars, not based on how long it takes. Right. It is purely just, this is what bookkeeping costs. Right. Okay. And that's how we're going to do it. You're going to know exactly what your invoice is going to be. And you're going to do it. You can do it on a monthly basis. You can do it on a quarterly basis. But you're going to pay the flat amount on that regular amount every month. You're not going to get any more surprise bills from us.
That's right. That's right. The good thing is when you're on this, so you can have like these unlimited calls within reason. Right?
That's right.
To your staff member, to Rick or myself. And it's going to roughly save you at the bare minimum 15 to 20% every year. Because if you think about it, when you're prepaying for next year's tax returns, even though we didn't go up this year, but let's just say in the future, we do have a price hike or price increase. Okay. Well, if you've prepaid under the prior year's values, right? You've purchased those returns at a discounted rate, first and foremost. Number two, we're not going to have to track time every time you call in, you have a question. And we like that approach because we don't want you to fear calling in going, well, I have a question about something. That's going to cost me $250. I'm not sure the value's there for $250. Right. And then it creates this roadblock. And it's this push and pull relationship with the client, Rick, which I really don't like. Right. We want you guys to call in when you feel comfortable, and you're not going to have your hand slapped for doing that.
Right. And that's I think we've heard from enough of our clients over the years that's their number one beef with the way all accounting firms do it. Is I don't want to feel like every time I call you, next month I'm going to get an invoice for that call, right? And so we are definitely moving away from the hourly tracking of billing and trying to send out invoices. Not only does that impact our clients, but it impacts us because that means we spend time tracking people's hours, creating invoices, mailing them out, dealing with phone calls from our clients who say, why did I get billed for this? And having to explain why that's there. That's going to eliminate a bunch of our time as well.
Right. All the administrative tasks that no company wants to do, right? We want to spend our time with the meat and potatoes, right? We want to be where all the work's getting done.
Which means I can meet with clients more.
That's right.
And that's really what this is about, is freeing up time for Jake and I so that we can meet with our clients one-on-one and go, how can I better serve you?
Yeah. And I think, like I say, just to hit on all those things we talked about, I mean, we have proactive planning around here, Rick, unwavering client support that we offer, a commitment to their financial success by guaranteeing the work that we do for them. Basically, we're their trusted advisor that we work closely with them to optimize their tax strategies and safeguard their financial future.
Yeah, absolutely. I mean, at the end of the day, we don't want to be known as just your tax preparer.
No, not at all. We're an extension of you.
Yep.
Okay, so we're going to kind of transition into the next topic here. We have a new president in office, Donald Trump, and one of the things I want to poke out there, and this is not a political statement. This is not a political post. This is a general key observation. Everyone should look at it in this capacity. We got a new president. My real question is, are you any richer because Donald Trump is in there? The answer is no. And the reason you're not is it's because what you do, okay? Rick, you want to talk about that and how this ties into our CFO and our tax advising that we offer?
Yeah. So it's amazing to me every election year, and you say it's every 2 years, every 4 years.
Right.
You talk to a business owner and they go, well, I'm holding off until the election's over so I know exactly what's going to happen.
External factors.
And it always boggles my mind because I'm like, is the election really going to impact you? Right. No. I mean, if you were a Fortune 500 company and you were in the, say, oil and gas industry, yeah, it might matter who gets elected because whether or not you could drill that next year is important. But for most companies that are the small and middle cap companies, who's president, it really isn't going to affect their stuff.
Yeah, I mean, you might have some, like Rick was saying, you might have some macroeconomical factors that are associated with it, but that should not, for the most part, change your core business and how you operate.
Right. And so at the end of the day, we want you involved with us from the get-go so that you're using us things. Yeah, we're going to look at who's coming in and what are their tax strategies going to be, what tax policies are they going to implement, how could that help or hurt our business, and how do we navigate around them, right? And I've got a whole bunch of things with some of Trump's tax laws that could be great.
Yeah,
that could really help some of our clients as we're looking at some of this stuff. I saw this post 2 days ago. Trump wants to remove the IRS, right?
External revenue system.
And he wants to have an ERS, the external revenue system, right? And one of the things that most people don't realize is that prior to World War I, our country didn't live on the income tax.
No, we didn't.
We lived on tariffs. We tariffed other countries,
That's
right? And we are notorious as in the U.S. here. We are a country that works at a trade deficit, which means we import more goods than we export.
We do.
Okay. And we didn't used to do that. We used to be a high producer of cotton and iron and steel, and other countries relied on us, right? We aren't that anymore.
We're not. Times are certainly changing. But, if you're a business owner, I would just say, I would ask the question, what's holding you back? Is it your lack of knowledge? Is it the will? Is it the fact that you don't have a blueprint in place that tells you what to do?
Right.
Because if those are the things that's holding you back, one of the things about our organization here is we're a partner for our clients. We're here to help get them to push through that barrier, right? Whether that's to go over that hurdle, under that hurdle, around it, push a little harder through it. We're going to give you the guidance and what you need, right? We're going to offer the CFO guidance, tax advisory, heck, business coaching, bookkeeping, tax planning, and preparation, all wrapped up in one.
That's
okay?
Right.
And so I say this, look, if you want to do great things, you have to partner with the right people who also want to do great things by your side. And I think that's one of the things that set Rick and I apart is when it comes to, these plans, I think that we're really kind of unmatched in our industry because no one really offers the business coaching, the CFO advisory. I mean, you can find CFO advisors out there, the fractional CFOs, but they don't, most of the time they don't work, they don't add the tax advisory plan with that, right? That's outsourced to somebody else. Everything we do is all internal here. And I think that's the thing that sets us apart more than anything.
Well, and I'll kind of harp on that. I've got lots of clients that have used these fractional CFO services that's all they do. And at the end of the day, they're paying big bucks and they're like, I don't know what I got out of it. I got a report that I don't understand. Okay. And that they don't spend the time at going over with me and help me understand what I'm supposed to be doing with it. But I'm basically paying for this report and I've got it. It's a nice bound, pretty paper and all that, but it's meaningless to me because I don't even know how to use it.
Guys, it's nothing more than an extension financial software that plugs into QuickBooks.
Right.
That's all it does and allows them to produce reports. Okay. It's not worth the paper it's written on, to be honest with you. If you don't have someone there to explain that to you, to guide you through there, to come up with strategic approaches on how you should operate your business, and then, help shelter you on the taxes on the back end, you're paying a whole bunch of money for absolutely nothing.
Yeah. I mean, you should have somebody as a CFO that's looking at not only tax policy, but economic policy and going, okay, what's about to happen and how can we get ahead of that?
That's right.
You know,
That's right.
Trump's already come out and said he's going to put pressure on the Treasury Department to lower interest rates.
That's right. That's right.
Who's working with you right now to go, if this happens, what should I be doing?
Right. Right. Yeah. And the good thing about us is it's a fully money back guarantee, meaning that if we don't reach certain metrics, and it's a 3-pronged test that has to be met just to keep things simplistic. It's full transparency. We're going to increase your EBITDA. We're going to increase the valuation of your company, and we're going to save you in taxes. If those 3 elements right there, we don't reach that metric for that year right there. So if you spend $50,000 for this service and we don't hit $50,000 between those 3 right there, we're going to give you 110% of your money back, the difference on.
Yeah.
Nobody else out there in this industry is doing that, Rick.
No.
Nobody. Okay. So we believe in what we're doing. We believe so hardly we're willing to put our money where our mouth is.
Absolutely.
But it's up to you, right? You have to take that first step.
Yeah.
The first step starts with you. Look, we can be the resource. We can be the tools. We can be that confidant that pushes you through, but you have to put in the work to go with it. And so that's why we're very selective. We only bring on 10 of these clients a year. That's it.
Yeah, because honestly, you're only going to work with Jake or myself on this, and so our time is limited given how much we do here at the firm. So we can only handle so many of these clients at one time because it's a very in-depth process, right?
Mm-hmm.
We've looked at it. It's time consuming on a month because this is something you do on a monthly basis with a client.
That's right, and our minimums aren't cheap. I will be honest with you, they're not.
Yeah.
But you get so much value out of it.
Yeah.
I mean, I think if you're serious about business, you can't not do it.
Well, and if you're an older business owner and you're thinking, I'm 5 years from a retirement, you should be thinking about how do I maximize the value of this business?
Absolutely.
Right?
Succession planning needs to be.
You need to be working with someone right now.
That's right.
Right now, not right before retirement, right now, so that you're maximizing. Because when a buyer looks at you, they don't look at just this last year. How did you do? They look at the last 3 to 5 years. How's the company grown?
That's right.
And if it's been nothing, and then the last year was this weird hockey stick that suddenly the company looks great, they're going to go explain that.
Well, and look, man, we get it. There are business owners that like to convolute their financials and throw a bunch of personal expenses in there. I understand it. I'm not for it. I understand it happens. When you are prepping your company for a sale, going through a succession plan, you need to make sure you have clean financials. And let me tell you the reason why. One, it's going to increase your EBITDA number.
Absolutely.
Number 2, if a prospective buyer comes on board and is looking at buying your organization and you have what I call muddy financials, if they can't get comfortable with the company they're buying and the financials that are being represented, they're going to apply what they call a discount rate that is associated with that company.
That's right.
So let's just say, for instance, something is a 3x on the EBITDA. They're going to probably apply to 1.5 to a 2. So now your valuation on your organization is substantially less. Yeah. So that's why it's key to have a fractional CFO that does tax advising, especially 3 to 5 years out. You should, if you're serious, you should have it every year. But especially for the last 3 to 5 years, you better have that in place.
Yeah, because not only can you take it from losing that discount, but maybe you can increase that percentage, right?
That's right.
So instead of it being a standard 3x or 4x, it could be a much higher because you have positioned yourself within your industry to be better than your competitors.
Yeah. And so there's a couple of things they look at, right? So if you're looking, let's just say you're looking at the last 3 years. If you have, income here for year 1, income here for year 2, income here for year 3, and it's steady going up like that, well, that looks good. But let's say all of a sudden you have year 1 is here, year 2 is up here.
Yeah.
Year 3 is down here.
Yeah. That's awful.
That looks terrible, right? They can't get comfortable with those financials. Right. Okay. Additionally, if all of a sudden, if you're comparing this to another organization that's about to sell in the industry, and let's just look at, table 1, year 1's here, year 2's here, year 3's here. But your organization is year 1's here, year 2's here, year 3's here. So it's scaling at a faster rate.
That's right.
You can have a higher multiple that is associated with it. And if you can't track those metrics in there and have the right financial reports that tell the story with the review notes at the bottom, you're leaving money on the table.
Yeah.
That's what you're doing.
Additionally, we can save people on the valuation at the end, right?
That's right.
Because if you're working with us, you don't have to then go out and find that third party valuation person to value your company so you can do your sale.
That's right.
Okay. And valuations are not cheap.
Very expensive.
You know, you may the starting price might be 10 grand.
Minimal. Yep.
Right.
Yep. Absolutely. So anyways, those are some of the services that we offer here. I want to kind of, dip into avoiding common tax mistakes that can trigger audits, Rick.
Okay.
There's some common ones that are out there.
Oh, yeah.
You want to talk about maybe unreported income?
Yeah. So I alluded to this earlier. Typically, when an audit gets triggered, because the IRS gets a copy of every form that's ever sent out, right? So a 1099, a W-2, K-1. If you're using a online billing service like Square or something, that they issue a 1099-K.
Yep.
And it can be any number of different forms. But all these forms, you get them in the mail, but so does the IRS. Okay. And they have all those, and they're locked with either your personal Social Security number or your business EIN. And when you file that return, they're looking, does this match the forms that we've got on file? And if those numbers don't jive, you're going to get a letter that says,
that's right,
hey, you reported income of $1 million, but we got a 1099-K that says you have 1.5 million in transactions.
Yep.
Where'd your $500,000 in income go?
Yep.
Right.
Yeah. And to hit on that a little bit, guys, what I want you to understand that even if you did not get a 1099, right? Someone paid you below the 600 threshold, or someone just didn't issue a 1099, you still got to report it as income. Okay. So, I promise you, they have access to all of your bank accounts.
That's the other thing.
Yeah.
Everyone thinks, well, if I didn't get a form, the banks are reporting now.
Yeah.
They report a bunch of stuff to the IRS. So if you think you just ran everything through the bank and nobody issued you a 1099,
no.
They know.
They know. I promise you, they know. So these source documents, these forms that Rick was alluding to, basically, it is kind of a stopgap for them. It just, obviously, let's just say, you had 100,000 revenue in your business. And then, if you've got, 1099s that show 110 or 120, that's an easy slam dunk for them. Like it's not even an auditor that it even takes. Like the computer will generate that audit automatically.
Well, that's most of the letters that are sent out are basically computer forms, right? Yeah. The actual audits that are generated by an actual IRS agent, that the stats vary year to year, but they're between 1% and 2% of all of the form letters that are sent out, and those are ones where the person just randomly picked a return, and people think, well, I'm not a high net worth individual, so I'm not going to be in that category. No, this could be just a random, hey, your Social Security came up in the lottery, and we're just going to look at your return, and I'm looking at some discrepancies. The computer didn't pick it up, but I'm kind of looking at it and it doesn't make sense. So I'm going to send you a letter.
Yep.
Okay. Those happen all the time. Okay. So don't think that if you're not a multimillionaire that you're not eligible to be an audited person. You are.
Sometimes it's a lot easier to go after low hanging fruit.
And that's the other thing. Keep in mind that the multimillionaire has a circus of attorneys and that's willing to defend him.
CPAs, yep.
Your small little business that's making $100,000, it's real easy to go after you.
Yeah. Another little area out there that's easy for them to trigger is excessive deductions.
Yeah. So I'll use that $100,000 client, right? So if you got $100,000 and suddenly you're taking mileage deduction and you're taking $80,000 in mileage deductions, that looks funny. How did you only make $100,000 on $80,000 worth of miles? Because that, if you back into that, you're talking a couple 100,000 in miles. Yeah.
So all of these businesses, you have these business activity codes, right?
Yeah.
And so there's a reason that it's a comparison analysis and how they do their due diligence on the front end that triggers a lot of these audits. And so when that return is filed, whether it be a Schedule C, whether it be a Schedule E, whether it be a 1065, 1120, 1120S, when you fill out that business activity code, they then take that tax return and they compare it across that industry of tax returns, right?
Yeah.
And so if they're seeing 100,000 in revenue, and then they want to look at your travel or your miles or how much that you have spent on any one category, they're going to look at that. And if anything stands out based on your revenue and based on percentages that's associated with that, that's going to trigger an audit just like that.
Yeah.
Okay.
And it could be other things like home office deduction, right? If it looks like, the standard person claims 3 to 4% of their total house as the home office deduction, and you're claiming 40% of your home is the home office, that's going to trigger an audit.
Yep. Kind of a pro tip here is make sure you take photographs of your dedicated workspace that you can maintain your utility bills and your lease agreements and things like that. Realize that this office has to be a specified office. It can't be in your living room. Right, you pull your laptop up and then you're watching TV while you work. That's not a dedicated office. You don't get a home office deduction for that.
Yeah, no shared spaces, and it can't be a bedroom that you've got a guest bed in or anything like that. It's got to be a dedicated space, right? And so definitely keep that space unique to what you're doing. Now, does that mean that you can't use, say, like your garage? Maybe you use your garage as storage for your business. Can you use that? Yeah, absolutely. Yeah. But don't park your car in your garage. Don't use it to store your personal stuff. It needs to be solely for your business.
Yeah, or you better partition that completely off.
Absolutely.
Have closed doors and make sure that area is allocated just to that one specific area.
Yeah.
So another area that comes up is foreign assets, because there's a lot of money laundering, a lot of stuff coming in and out of this country. Okay?
Yeah. So with the BOI. Before the BOI, we have on the personal side, we have what's called FBAR, right? Mm-hmm. So FBAR is foreign bank and asset rules. And basically what you're doing is if you have assets, I think it's $5,000 is the limitation. If you have more than $5,000 in value in an asset that's in some kind of account overseas, and it could be Canada, you have a reporting requirement to file with not only the IRS, but with a FinCEN.
And what Rick's referring to, it could just be over 5,000 for one day. It's the highest number for that one day. And you also have to do the conversion ratio that's associated with it as well, right?
Yeah. And so if you fail to report these accounts, the penalties are severe, up to 50%. Of the account value of the account could be taxed back to you, right? And so people go, well, how do they know? Well, we have relationships with most countries, and we reach out and go, report all U.S. citizen accounts with your bank.
That's right. Cash intensive businesses is also kind of a red flag that triggers an audit as well. Yeah.
And so this is, your coin operated businesses like laundry mats. It can be, if you're a server and you get a lot of cash tips, those types of things. So if you
sometimes even in construction too, because a lot of times I like to pay them in cash.
Yeah. So look, Darius isn't dumb. They know how businesses work.
Correct.
And so if you have, if it looks like you are bringing money in from a cash or paying out in a cash manner, then you're going to be highly eligible to be audited. You just are.
Yeah, make sure you keep detailed record of your sales and things that are associated if you happen to use cash. Another thing that comes up is when a taxpayer is frequently amending returns all the time.
Yeah, and so I will tell you, this is not just a risk from the IRS, but here lately with the interest rates, what have we seen? We've seen a lot of people amending returns so they can qualify for a mortgage. Okay, and so we get asked all the time, hey, can you not take all these deductions so that I can qualify for my home? I want to show more income. And then we'll just file an amendment afterwards and take all my deductions and get a refund. Well, that's mortgage fraud. Okay. The IRS is well aware that this happens, and they will report you.
Yep.
They will absolutely report you for mortgage fraud. So if you think you're going to play the shell game with the mortgage banker and go, I'll just not take $50,000 of my expenses on my originally filed return so I can qualify with the bank to get into my mortgage, then I'll file an amendment later and claim those deductions, you're setting yourself up.
Yep. That's true. Cryptocurrency transactions is something that's big right now because, it's new in the sense of a lot of the reporting isn't up to par or they're getting it up to par with other financial instruments out there like stocks and securities and things like that.
Well, Trump's come out and said that the U.S. will be the hub for cryptocurrency.
That's right.
So I guarantee you, if we are going to become the hub for cryptocurrency, there's going to be a whole lot of new rules and regulations that go around how it gets reported, how cost basis is tracked, how transfers of assets between the different platforms occur. You're going to see a lot more stuff come on this because crypto's here to stay. And if we're going to make it a part of the United States as the go-to place, we're going to regulate it.
That's right. That's right. Let me ask you this: how do you reduce audit risk, Rick?
Well, so there's a number of different ways to do it. One is keep good records.
Yeah.
Okay.
Yep.
Keep good records. But on top of that, work with someone that knows the tax laws.
That's right.
Okay. I can't tell you the number of people that I've talked to that have used TurboTax, and they thought if the software allowed them to do it, it must be something they're allowed to do.
Yeah. That doesn't work with the IRS.
And so,
No.
yeah, I've heard a number of people say, well, I got audited. I have the Schedule C business and I just put 50,000 miles for my vehicle, and TurboTax didn't tell me I couldn't do that. So I must have been allowed to do it.
Yeah, I want to hit on something. This is what I've always told clients over time, because for whatever reason, I think it's just clients don't know, or people don't know out there. They assume that all tax software is the same. Right. And so when I tell them sometimes how much we spend on tax software every year, it blows their mind, Rick.
Yeah.
Like they absolutely are just mind boggled, because they're like, well, I can get TurboTax for, a couple $100 here or there. Why are you spending tens of thousands of dollars on it every year, Jake? And I explained to them that not all software is the same. And the software that is dumbed down, right? It's like Tax for Dummies on TurboTax. If it's asking you a question, right? If this is this, then this is this. If this is this, like our professional software doesn't ask us questions like that. If you don't know where it goes on the return, you shouldn't be the one preparing the return.
That's right. Yeah. And I mean, when we fill out the return, our people are trained to know where it goes.
That's right.
Okay. The software isn't a step-by-step manual that says, take this, put it on this screen.
Yep.
No, they have to know where it goes. TurboTax is the same way. Yeah, it asks you all these simple questions, and you can fill it all out, but there's no checks and balances within it to prevent you from making a mistake.
Yep.
And it's real easy to make a mistake on your taxes.
Yeah. And we hit on earlier about the audit protection. Invest in audit protection services. And if your firm that you're with doesn't offer that, you need to go find one that does.
Yeah.
All right, Rick. This name has come out and it has been all over the internet, okay? Bonnie Blue. Do you know who Bonnie Blue is?
So she's the chick that's on OnlyFans, right? That decided she's going to break the record.
She's going to break the record. Sleep with 1,057 men over a 12-hour period, breaking Lisa Sparks' 919 partners that she had in 2004 over 24 hours. Okay. Crazy. Disgusting, but it's out there. This leads us into, she's a content creator is what she is at this point.
Correct.
On OnlyFans.
Yep.
And so it may seem a little bit off. I don't condone it. I'm not for it. It is what it is. It's talked about a lot. It boosted her popularity. I'm sure the young lady is making a lot of money.
Oh, yeah.
Let's talk about Bonnie Blue and other content creators, whether they be OnlyFans or whoever, any type of content creator, and what their taxability is and how they're treated in regards to the IRS.
Yeah. So just like any kind of professional that does this kind of where you create your own kind of work and stuff and you sell it online, you're contract employee for yourself, and you're going to get a 1099. Now, I don't know, Bonnie, hopefully she's got a great tax person that's advising her and has structured her around a good business organization to protect her from tax liability.
Maybe one of those 1,057 guys.
Yeah.
Maybe one of them were.
But she, at a minimum, she's going to get a 1099 that generates all this. She's got subscription income coming in, probably some sponsorship income coming in. She's going to get all this income coming in that she's going to have to pay taxes on from a content creator. And then knowing what am I eligible to deduct as a content creator?
So she's subject to self-employment tax.
Right.
That's right.
And that's a lot. That's 15.3% that you're going to pay before you even pay your income taxes.
Let's break that down for a second, right? The self-employment tax side of things. Because not a lot of people understand what self-employment tax is. It's in addition to federal income tax.
Absolutely.
Right? It covers your Medicare and your Social Security tax.
Yeah.
When you are self-employed, you wear the hat of the employer as well as the employee. That means that you have to pay 7.65% on the employer side as well as 7.65 on the employee side.
That's right.
Add them together, you get 15.3. So this is in addition to your federal income tax. And that's what Miss Bonnie Blue is going to have to pay in taxes.
Yep.
So what she could do is she could restructure some things. Could she not?
Absolutely.
Just like other content creators are.
That's
and
right.
we do have some content creators that are some of our clients as well here.
Yeah, absolutely. We have several YouTube stars and TikTok people that do, that's their main way of generating income.
Yeah.
And there are great tax advantages for structuring the right way around those specific industries.
That's right.
But if you don't know what you're doing, you could set up the wrong company. You could set yourself up to be taxed in a much higher bracket than you should be. And this is why it's great to have an advisor, whether it's a legal professional or a CPA, that can come in and tell you, you need to be structured this way.
Yeah, absolutely. So Bonnie Blue, if you don't have a tax advisor, call LNY. We'll help you out there, okay? The TikTok ban. Let's talk about that for a second.
Sure.
They recently uplifted it when Trump got put into office. They're going to give us 90-day extension here. Let's talk about some of the things, Rick, if you don't mind. I know that Trump wants 50%, at least 50% of the company to be owned by an individual or a U.S. company here. Yep. Let's talk about the valuation of the company. Let's talk about, some of the income items and why it was important for them to extend this for 90 days and who all it affected.
Yeah. So the original agreement that was set out for TikTok to be able to continue was a full divestiture. They wanted full divestiture from China to a U.S. based company, and China, of course, was not willing to. I'm not going to give up $75 billion worth of stuff. So Trump's come in and expanded it. Now the question is, will the 50% be enough? He is getting some pressure from some other politicians saying we want it to be 90%. Right? We want not just a slight majority. We want a full majority control over the company. There's a lot of arguments why, there's a ton of spyware associated with TikTok, between personal information from your cell phone that they're collecting, other companies that you touch, because let's be honest, your smartphone collects all your data wherever you're at, and TikTok, when it energizes with your smartphone, it gets all that data and goes back to China. So there's a couple of reasons why this all happens, but at the end of the day, there's going to have to be some kind of divestiture for TikTok to continue. Now, if it's 50%, if it's 90%, who knows? Will they meet in the middle? Will it be 75%? But what's going to end up happening is there's going to be a company formed, and it could be Musk, it could be
Larry Ellison,
it could be any of the big wigs that have the money. Yeah. They're going to form this company, put it in there, and then they're going to take a stakeholders percentage in TikTok, and technically, the company will now be a U.S.-based company with a minor shareholder sitting out in China. Yeah.
I mean, the deal's going to get done. There's too much money to be made in it. I even heard that the other day Mr. Beast's name has kind of entered into it as well.
Yeah, Mr. Beast is the largest content creator across TikTok, YouTube. He's got 600 million followers, some crazy, insane thing. It could be any number of people, but will the deal get done? Yes. They're not going to let TikTok go away. And I never bought into that it was going to eventually be banned. This is all political pressure.
That's it. So, like Rick was alluding to, there's a lot of regulations that have to be upheld. And you know what? Honestly, even if it's not done the next 90 days, I think they'll give it.
There'll be another extension.
There will. So don't freak out, guys. DOGE, right? The Department of Government Efficiency. Yep. I'm excited about that, Rick.
Yeah. So we all know the government spends more money than it should.
Yeah.
Yeah. Whether it's the slush funds that go out for the politicians, whether it's, our military industrial complex and the way that they do things. Musk is, he's come out and basically said, I'm going to go through every single financial and I'm going to find the money and we're going to eliminate it. He promises, we'll see how well he can keep this promise. There's no more going to be these contracts that are evergreen contracts where people keep getting paid, but there's no performance done on these types of things.
Yeah. I mean, one of the executive orders that Trump signed the other day was for all federal employees to come back into the office.
Yep.
one of the things that I found that was quite alarming was, and I could be slightly off of my percentage, but it was something along the lines of 86% of office space was being paid for but underutilized because all the workers were working from home.
Yep.
And so us taxpayers were footing the bill for that.
We're paying the rent.
We're paying the rent for that. So I'm excited by this, and hopefully, even if they can achieve 50% of what they're setting out to do, I think would be fantastic.
Yeah, no, we definitely need to go through and find some of these big wastes of money that the government is planning to do. The honest truth is we run a between $1 and $2 trillion deficit every year.
Yeah.
And Trump and Musk are both saying they can eliminate most of that through just going through and identifying some of this wasteful spending.
Yeah, I agree. I mean, with all this going on, I mean, it's going to impact us. And I think that it will also, one of the things that people don't talk about, and you're seeing it in Argentina right now with that new president down there, Milei or whatever his name is.
Okay.
He cut so much, their inflation was just going out of control. It was in the thousands of percentage every single year.
Oh my goodness.
And literally he dropped it within months down to like 2%.
Yeah.
And he cut out like 85-90% of all the spending.
Right.
So, what the government purports to us all the time is the only way to affect inflation is to raise interest rates or drop interest rates.
Yeah.
But the reality is it's a greater impact by just cutting government costs, right? But they never want to do that until now.
Well, and whether it's cutting certain things, but let's be honest, we have redundant departments. I mean, you've got one item that 4 different departments are overseeing.
Yeah.
Right. Why do we need 4 departments to oversee one item?
Yeah.
Okay.
And some of these programs that they have out there, I saw something the other day, like they spent like $2 million to see if cocaine made a monkey have anxiety. Think about that for a second. We're going to spend $2 million, feed this monkey cocaine to see if he gets anxiety. Was that a good allocation of our resources?
No. And that,
come on.
Yeah. So there's a ton of waste. We have way too much. We have a bloated government. We do. We have a bloated government that needs to be reined in. And this can be done at the federal level. Of course, we have several states, California being one of them, that also have a bloated government that they're struggling from an economic standpoint, right? We want to understand and get inflation under control. We get spending under control.
We do. So there's a lot of challenges. There's going to be a lot of pushback, but
I expect lawsuits. I expect every department to come out. I mean, even with the executive order to bring people back in to work, lawsuit was already filed. Yeah, we don't want to come back into the office.
Of course.
Okay. Of course. So this is. While these policies are being implemented, don't expect immediate change.
Yeah, and if you don't think it's Trump's going to be or Musk is going to be successful in this, I mean, look at how he operated Twitter when he cut like 85%.
Quite a bit of them
of the people working there, and they run more efficiently today than they ever have.
Yeah,
and everybody said he was just going to run that company in the ground.
Yeah,
I mean, the guy's bringing back rockets from outer space and landing them back here. Okay, you don't think he's not going to be able to cut the budget? Yeah. I think you're going to figure this one out.
He will.
So Trump then came out the other day and mentioned this $500 billion in Stargate initiative.
Sure.
There's a lot of hoopla and a lot of kind of cat and mouse games going out right now between Altman, the CEO of ChatGPT, and Elon Musk. Neither one of them, they have no love for each other.
Right.
But let's talk about that for a second and how we're going to be the cryptocurrency and AI capital of the world.
Yeah. Well, so Altman's afraid the government's going to infringe upon his business models that he's got with, I mean, ChatGPT, it is the go-to AI right now on Google, right? It is. So, but what this company is going to do is it's going to start exploring and bringing in technologies that are going to support the AI. A lot of questions about, well, how much is AI going to impact jobs? Right? How many jobs are going to get eliminated with it? And there's a lot of uncertainty as to whether or not the jobs they create are going to be enough to replace the jobs that would be eliminated. But guys, AI is here to stay. If you think AI is going away, it's not.
It's not.
AI is going to continue to take over for different things. Jobs are going to be this, just like with any type of cyclical economy. We went from a very agrarian to an industrial. Jobs were lost. Farmers were displaced.
Yep.
Work hands were displaced when the cotton gin came in. Then we moved from an industrial to more of a space age type thing, where we made things much more efficient. Factory jobs were lost. People that were used to, hundreds of thousands of people that worked in factories, they lost their job because machines came in. This is a cycle that always happens.
Yeah.
We're now in that next cycle where AI is going to come in. It's going to take over a lot of people's jobs because it's more efficient.
Yeah. We're all going to have to work differently. I mean, like Rick was saying, embrace it, man. Absolutely embrace it. It's not going anywhere. So it's not, if you should be worried, but you need to adapt. And worry is only going to take you so far. You have to adjust accordingly.
Yeah. So whatever business you're in right now, you need to be exploring AI. You need to be, how can AI help my business and grow? Because if you get ahead of your competitors using AI, it's going to set your business up.
That's right. That's right. And so, and this could roll into SpaceX, right? Which SpaceX at one point, I know Musk has kind of shot it down that he's going to, take it to an initial public offering to an IPO. But eventually I think that will happen, Rick. I think he's trying to keep it private for now. But let's talk about it when a company goes public and how taxes are made, right? How taxes are calculated on capital gains, short-term and long-term. You want to talk about some of those things?
Sure. So when a company goes public, what typically happens is there's a public offering that happens with stuff. Usually the initial founders of the company offers up a percentage of their own shares, and then new shares are going to be created for that company that go out into the public. And the selling investors, the people that currently own the company as a private company, they're going to sell a portion of their shares out into the public, and they're going to experience what's known as capital gains.
That's right.
Okay. And those capital gains can be taxed short-term or long-term, but for the most part, they're long-term gains, because this company's been around for years.
Yep.
Right. So I've had it for more than a year. I'm going to pay capital gains on my basis. What did I originally buy in for? Plus the accumulated basis, the taxes that I paid along the way to increase the amount. And I sell these shares out in the open market, and I have a gain based on that. And then the question is this a 0%? Is it a 15%? Or is it a 20%?
That's right.
And it really comes down to your income. How much money do you make as to which bucket you're going to fall into?
That's right. That's right. With SpaceX and a lot of companies that are out there in this plan as well, they deal in what they call research and development.
Yep.
Right? So there's research and development credits. And so that's one of the things that we specialize in here as well. I know one of the firms I used to work for ages ago, probably 18, 19 years ago, I used to work very closely with the R&D partner there, and we did a lot of R&D over there. And so let's just talk about, it's a 4-pronged test that must be met in order for you to qualify. You have to have what they call technical uncertainty at the onset, meaning that you don't really know what the outcome is going to be. You have to go through this iterative process to get there. It must be technological in nature, basically meaning it must be based on the hard sciences, not the soft sciences. Right? So it has to be based on physics, engineering, biology, things like that. You must have a permitted purpose to do it. You're aiming to develop or to improve, basically. And because of that technical uncertainty that you had on the front end, you have to be able to eliminate or make strides to eliminate the uncertainty by going through this iterative process. And so it's trial and error, it's hypothesis, and you have to document all that. And if you do that well, and you're based on the hard sciences, and you have a permitted purpose, you could qualify for what they call research and development tax credits.
Right.
And so if you have questions on that, you need some assistance on that, please feel free to reach out to Rick or myself. We'd love to help you and guide you along the way.
Yeah, it's a well-documented process. But you definitely need an expert to help you along the way. This is something that most taxpayers don't have the capacity to undertake and calculate whether or not they want to qualify and what the actual credit would be.
Yeah. I mean, look, guys, I've seen it in engineers, software companies, seen it in manufacturing. I've seen it in chemical companies,
transportation.
You would be surprised what actually qualifies out there. And so if you think that you qualify and you just don't know, give us a call, reach out. We'll be able to determine. We'll go through this questionnaire and we'll ask you all these different questions and we'll let you know if you qualify. And then if it makes sense, then we can do an R&D study and realize that we can even do the R&D study today. And let's just say, you qualified a couple of years ago, we can go back and amend those returns and get you tax credits on that as well.
Absolutely.
So there's a lot of great tax benefits on that. And honestly, none of it's going away. It's actually going to continue to ramp up.
No.
So Rick, you hit on it earlier about the external.
I'm excited about this, honestly.
Yeah. The tariffs that's coming downstream. Yeah. So it's very controversial right now.
Depending on the economists that you talk to, a lot of them say, it's kind of split. A lot of them will say the tariffs are going to kill the economy.
It's going to make us pay more.
It's going to make us pay more.
Yeah.
There's other economists out there that look at it and go, this is how it used to be. Okay. So if you don't know, prior to World War I, 95% of the U.S. government functioned on tariffs. There was no income tax. Okay. Mm-hmm. We had minor income taxes where people paid 1 or 2%. We had poll taxes. They didn't amount to much. We lived off of trade. We traded with countries and we made money off of those countries.
Yep.
And it was, if you look back at the history of the country, this was when we were in what we called our protectionism type thing. We were protecting the country by keeping manufacturing here. This is what allowed the U.S. to become one of the strongest economies in the world, is we had effective trade tariffs that protected our economy. World War I came out, we moved to a more income tax base, but we didn't go away from that. It wasn't until the 40s, after World War II, that we removed a lot of the trade stuff that we did. We went from, at that point, it was around 50%. 50% of the government was funded by trade tariffs, the other 50% by income tax. We went away completely from that, and that's when we started operating in more of a deficit, and that's when other countries became more of trade partners with us. But unfortunately, we got the short end of the stick.
Yeah.
Right.
Yeah.
And so you look at a lot of the trade treaties that we've got now, whether it's NAFTA, some of the trade pacts that we got with China, things like that, they make more money off of those trade treaties than we do. Okay. But we do it because we want these global partners. And yes, we are a global economy now. We absolutely need those types of things, but it's become a detriment to us. And so Trump actually made a statement. It was funny. I'd never even thought about it. We went from a pay-to-play system to a pay-to-live system. We used to make people pay to play in the U.S. Now we make our citizens pay to live in the U.S.
It's a good way of looking at things. That's right.
Okay.
Yeah.
And he wants to get back to, we need to get back to being a pay to play. You want to do business with the U.S., you need to pay to play with us.
That's right. That's right. I agree with that. I agree. You got over 75,000 IRS employees that are out there right now, you know, and if this goes into effect, I think it'll go into effect in some degree. Will it wipe out all those jobs? I don't think so. But I agree. We need to start moving in that direction at some point. So people have to relocate and find new jobs and new opportunities. But I think that we could potentially be more productive as a nation because of it.
Well, yeah. So if we could bring back some of the manufacturing that's gone overseas, look, I get it. There are places where there's cheaper labor, things of that nature. But if you reinforce manufacturing to come back, we absolutely have the tools and abilities to do it. Would it take a couple of years to do it? Yeah. Could you force Apple, who does 90% of their manufacturing in China, to come back to the US and do the manufacturing process here? Absolutely. I mean, why do we have Toyota building plants here?
That's right.
Because we put tariffs on it to make it more incentivized so that they would build their plants here and manufacture those vehicles here. You can do that with all these other companies.
Yep.
And we would build our economy again.
Yeah, so there's some data out there that says that the tariffs will probably account to about 350 to 400 billion in tariffs, whereas the Internal Revenue Service collects around 4 trillion a year.
Yeah.
So to put things in terms, I mean, it's
a drop in the bucket.
Yeah, it's a drop in the bucket.
Yeah.
But it's a start.
Yeah.
It's a start, guys. And so, you got to start somewhere. You got to start moving in that direction. And hopefully, if they can implement this successfully with the Doge, it could free us up not only to be a balanced budget, but reduce our taxes, which will create more opportunities for more businesses to want to come here and invest more money into America as well.
So I saw this interesting comparison. So if you look at, like a state like California, right, it has the highest taxes in the nations, right? Think about a city like Los Angeles, okay? not only does it have city tax, it has state tax, it has federal tax. They pay some of the highest taxes in the country there. Look at the state of Los Angeles. It's run down. Infrastructure sucks. You're dealing with forest fires there because the mayor and the governor mishandled the money there.
Incompetency.
Right?
Yep.
Compare that to, and who lives there? It's a conglomeration of the biggest, wealthiest people, right? Your Hollywood stars, a lot of your tech people live in LA.
Yep.
It is the go-to place. Outside of New York, it's the place that everybody wants to live, right? Compare that around the world. Look at a country like, say, or a city like Dubai. Do you know what the income tax there is?
Very little to nothing.
Zero.
Yep.
There's no income tax there.
Yep.
They tax businesses at 9%. You know where most of their money comes from? A lot of people say it's oil. It's not. Actually, Dubai has very little oil as compared to the rest of the Emirate states. It has very little, okay? They get most of their money from tourism and tariffs.
Right.
And they generate companies, foreign companies, to come in and build there because they built an effective tax structure that makes it easy for them to do stuff through tariffs.
That's right. That's right. So yeah, there's a lot here. Not to go through all the details on it, but I'm excited because this is the first time that we've actually had a president that is wanting to think outside the box and do something a little bit different.
Yeah.
You know, so. Capital gains, they can drain your investments. Let's talk about 9 specific strategies, Rick, to keep more of your money. Like for instance, holding your assets for greater than a year, right? To reduce it from 37% down to roughly 20%. Let's talk about some other things, if you would, like net investment tax and stuff.
Yeah. So, if you're an active trader, and I'm not talking a day trader, that's a business. But if you're just an active trader, swing trader, and you're trading in and out of your stocks every month, every 3 months, you're going to be subject to short-term capital gains. Okay. And that means that you're going to pay effectively regular income tax rates, not capital gains rates. Okay.
Right.
So, and if you're good at that, you could generate a lot of capital gains. You could reach our top bracket, 37%, right? If you're more of a general buy and hold and collect dividends and then sell them when they've appreciated over time, then we can talk about capital gains and get you down to 0, 10, 15, 20% capital gains rates, depending on your income, right? That's a huge savings from that. The other thing you have to keep in mind is if you are a swing trader and you buy a stock and then you sell it at a loss, but then you buy it back.
A 30-day period.
Right. And you do it within that 30-day period. That's what's known as a wash sale, right?
Wash sale. Yep.
Well, guess what? Now I don't get to take that loss.
That's right. That's right. That's right.
Right. And so you got to be careful. There's all kinds of things that could to harm you. Additionally, if you you have a nice portfolio, we can do some tax swapping. We can sell some stocks at a loss. Maybe you've got a stock that it's just never going to recover.
Yeah,
I've been holding on to this for 5 years. The company kind of went kaput, but it's not bankrupt. Let's harvest that tax loss and offset some current tax gains that you've got on that.
Yeah.
Okay. Maybe you're older and you just want to give some of your stocks away. You do a charitable give of your
charitable trust or something like that.
Yeah. And that's another way to get to maximize some tax efficiencies. There's
deferred sales.
We can set trusts up and work with an attorney to help you to get rid of some of these things that have appreciated that maybe you don't want to have to pay them in your older age.
Yep.
And maybe you don't have kids that you want to give them to.
Yep.
So there's a whole bunch of ways that we can help you save on these taxes for these assets.
Yeah.
Right?
And we have relationships with people that can be the external trustees because you can't retain control over this.
That's right.
And so
that's right.
There's so many different variables, so many different ideas and options out there for you. And that's part of what Rick and I offer here is that proactiveness on the tax advising. And like I said, we'd love to help you guys, but feel free, reach out to us. Let us know.
Sure. Absolutely.
Okay. So the expiration of the tax cuts, the TCJA is expiring.
Yep.
And so there's a lot of proposals and a lot of things that's on the plate right now.
Yep.
let's talk about some of those. The doubling the standard deduction to 27.7 or 13,850 for single.
Yep.
Let's talk about some of those if you would.
So under the old rules before TCJA, we had the standard deduction, but then we had what was known as exemptions, right? So it was a kind of a double thing.
It was.
Right. And the problem is the exemptions weren't very high. It was like $3,000 per person and that sort of thing. Well, if you were just a married couple and you had one kid, you had your standard deduction and 3 exemptions, and it wasn't a whole lot, right?
Nope.
And so what the TCJA did is it basically doubled the standard deduction and got away from the exemption. So for a smaller family, they saw a huge increase on that. But for larger families, if you had 4 or 5 kids, they actually hurt you because the doubling wasn't enough to offset the exemptions that you lost, right? So that was one of the big provisions of the TCJA. And there's a lot of negotiations right now on whether or not those come back. Do we keep the TCJA as it is, or do we modify it and allow exemptions to come back, especially for those larger families?
Yep. The talk is that they might increase the single filers up to 15,000.
Yeah, we're going to just increase the standard deduction.
Married couples then goes up to 30,000 on that one. The SALT tax, which I thought was the capping of the SALT tax on the itemized deductions for 10,000, I thought was the most ridiculous law that was out there.
So the idea behind this is we were trying to control the multimillionaires that have the $1 million homes that pay huge property taxes and not allowing them to write off $1 million in property tax. Right.
The problem is when the real estate started going up, then that started being very applicable to a lot of different.
I think the problem is that they set the cap too low.
Yeah, exactly.
At $10,000, right?
Yep.
If they really wanted to kind of mitigate the millionaires and kind of curb their deductions and still allow Joe Normal to take kids, they should have set it higher. $40,000, $50,000 cap as opposed to a $10,000 cap. Because let's be honest, we live here in Texas. Our properties aren't nearly what California or New York or even some of the Florida properties are worth. We don't have state income tax, but we do have pretty good sized property taxes here, right?
That's our offset,
right? And that's the way we offset it. But we, it's not unusual for someone here to have $700,000-$800,000 house and their property taxes are $12,000 and they don't get to take all of it.
That's right. Plus that calculation when it's calculating there, if you're in Texas, right, it's also calculating your sales tax is there as well.
That's right.
Right. So it's not even the full 10,000 on property tax.
Right.
So it was. Look, I get it. They're trying to get as many people using the standard deduct as possible.
Right.
That's really the drive.
They are.
If we want to be honest about it.
Right. Well, and it makes it easier on the IRS, right? That's another schedule they don't have to look at.
Correct. But hopefully that gets bumped up. It needs to be. The corporate tax adjustments. There's been discussions about either raising it. There's been some about dropping it if you're manufacturing here. I've heard it, from 21 now down to 15. I've heard.
Yep.
I think that's going to happen, Rick.
I do too. And again, this is all about getting manufacturing back into the country.
Yeah.
And so how do you do that? You incentivize it, right? You offer subsidies to the manufacturers, you lower tax rates, and you create incentives so that people will relocate those businesses in Mexico and in China and all the other places that they've gone to back into the country so we can create jobs.
Yep. Another area that they're looking at right now is elimination of the taxes on tips. That was something that Trump came out with. I think that will probably happen too. What do you think?
I think it will certainly happen. I think that they're going to limit the industries though. Because that was one of the big concerns was, well, how do you characterize what a tip is, right? Do you have to work in the food industry or can you say, work for us? And a client just tips you for doing a good job. Right. So I think they're going to specifically say you have to work in the food industry for this to qualify.
Yeah. I agree. There's a lot there to uncover. Social Security tax relief. How it is now, guys, is if you have other sources of income and you reach certain threshold, you can have up to 85% of your Social Security taxed in it. I think their proposal that I read the other day was they were going to eliminate income tax on all Social Security. Actually,
that is one part of Trump's plan. To be honest, this is pet peeve for mine. You're retired. You paid into the Social Security service your entire life. You retire and you get that check, and then you're going to pay taxes on it.
And
That's ridiculous.
And you got a negative return on your investment when you factor in inflation.
Yeah.
A legal Ponzi scheme.
Yeah. So one of Trump's proposals is going to be to eliminate that for the elderly.
Yep.
So everyone that is retired at this point, if you are thinking about getting on Social Security, keep that in mind, because that could be a big boost to you, right? Because Social Security was always meant to be tax free, and what they did is they changed the law so that if you had other taxable sources of income, then you'd reduce the amount of Social Security you would get and pay taxes on it.
Yeah. Disaster relief provisions.
Yeah,
that's another one as well, Rick. Enhanced tax relief for individuals and businesses in federally declared disasters. Some of those benefits will include faster deductions, so accelerated deductions like depreciation, stuff like that, for repairs and rebuilding costs.
Sure.
Expanded credits for property restorations that incorporates energy efficient upgrades as well.
Yeah, I'd like to see them go back and remove the disaster requirement for that, because you could be a business owner, maybe you just have a property fire and you lose everything.
Yeah,
you can't take a tax deduction for that unless a disaster was declared in your area.
Yeah,
right. So if you had insurance but it didn't cover everything, you're out that money.
Yep. Cryptocurrency taxation.
Yep.
That's another one.
And I think all that's going to change once Trump really implements a lot of the cryptocurrency changes he's going to be making. I wouldn't be surprised to see him change the taxation of cryptocurrency a little bit, instead of it being straight capital gains, maybe adding it to some kind of modified income tax.
Yeah, I can see that. Because a lot of the crypto now, they're especially a while back, they were doing basically a lot of day trading off of that.
Correct, and that's all it was.
Yeah.
And let's not forget, the original purpose of a lot of this was you had a server warehouse that was creating it for you, right? It was a business. It wasn't supposed to be creating this asset that you could trade long term. It was a business that you were doing, right?
Correct.
So I absolutely see them moving to some kind of modified arrangement where you don't get pure capital gains treatment on it.
Yeah, absolutely. And then another one, property tax reform as well.
So, from the federal standpoint, we don't pay federal property taxes. I don't ever see that coming into place.
No.
But I do potentially see them either at a state level coming in and putting in some caps, especially for our seniors. Let's be honest. You're retired.
There needs to be
some help for our seniors, right?
There does.
If you're living on Social Security and a very small retirement platform, you can't afford for your state to come in and go, we're raising property taxes on you.
Exactly.
Our seniors do not need to lose their homes.
They don't.
Right? Because they can't afford to pay their property taxes.
Yeah. And some green building incentives through property tax credits as well. Encourage energy efficient upgrades. And
the Green New Deal is going to go away, but we're not getting away from green energy.
No, we're not. Carbon tax initiatives, that's going to be another one, Rick.
Yeah. So we pulled out of the Paris Accords.
Yes, we did.
So, and to be honest, it was unfair. We were paying the lion's share of the taxes that were going towards the Paris Accords, and we are one of the lowest contributors when it comes to climate change.
Yep.
I think they said that China was paying something like $26 million, and we were paying something like $500 million towards it. And China far exceeds the amount of carbon emissions that we do.
Oh yeah.
Right.
Oh yeah.
I don't think we'll ever get to a place where we're like Canada, where there's a carbon tax on everything, where you have to buy carbon replacements for anything that you do. So I would never see that, but I could see us at some point putting in, especially maybe on businesses, a carbon tax on especially certain industries.
Yeah, I could see that as well. The wealth tax, the annual tax on net wealth exceeding 50 million.
Yep. So you've got, we always have had the estate tax. Estate tax has been around since the inception of the United States. People think that was something that just came about. No, we've always had an estate tax, always. It's modified and changed. I do believe that it'll go up. Currently, we have an exclusion up to 11.3 million per person. I do see that going up to that 50 million mark. Will it pass? Who knows?
Yeah, and I think we're also going to see some small business and entrepreneurial relief, like tax credits for businesses investing in specific technologies or hiring in underserved areas.
Yeah,
see that.
Yeah, we have opportunity zones now. I do see an expansion of that. We do want certain areas to be reintegrated with society, right?
Yep.
There's a lot of places around this country that have been abandoned. And Detroit is a perfect example of that, right?
Yep.
So, and Detroit is trying to make a comeback, but I could absolutely see them go through and identify specific areas, cities, townships where they go, we want to get you caught back up, get into the 21st century with us, and offer incentives for businesses to come in and grow stuff there.
Yeah, and we could see some simplified tax reporting for sole proprietors and small entities out there. That's possible. We could also see an expansion of healthcare deductions for employers that offer that.
Yeah.
I think that definitely is a necessity. It needs to be out there.
Yeah, absolutely. So if you're a small business in some of these areas, be on the lookout.
Yep. So let me ask you this. So what strategies can individuals and families adopt to mitigate the impact of the potential TCJA rollback?
Well, so assuming that some of this gets rolled back or all of it gets rolled back, one of the things that we're going to start advising clients to do is start maximizing contributions to things like 401ks, IRAs, and that sort of thing. If you have a high deductible health insurance through your employer, get into an HSA.
Yep.
Those are great strategies. One, they're tax either deferred or they can be tax immune if they're properly managed, right?
Yeah,
so those are great things. You don't have to be a high net worth individual to do estate planning. Estate planning is more than just managing that money. It's asset protection. So a trust or an estate can be very vital to someone that just maybe you want to protect your house.
Yep.
Right.
Yep, absolutely.
Utilizing the standard deduction absolutely is a key standpoint, especially if it's going to double or even just increase. But we're going to have to keep an eye on just how is the itemized deduction changes going to impact people. Because if they do expand some of these things, some of the things that people have kind of forgotten to track might be important to start tracking again. Right. That could be things like miscellaneous expenses that are not allowed right now. Maybe that comes back. Used to, you could write off your tax preparation fees on your tax return. Maybe that comes back.
Yeah.
Right.
Yeah, I remember that.
Reviewing withholding and tax strategies. Make sure that you are withholding out of your W-2 the right amount. Okay. And this continues to be a problem with the change in the way the W-4s are. If you are a dual income household, make sure that you recognize that on that W-4 form that there's more than one income stream coming into the household, because we see this a lot of times. People like to do that single with no dependents so that they think they're withholding at the right amount, but they don't show that there's another person working in that household. And so they're under withholding, thinking that I'm going to be at that single rate based on my income. And then they owe at the end of the year because you had two incomes coming in.
Yeah. I know this is a question that has come up, and we kind of hit on it just moments ago, is raising the SALT deduction cap.
Yep.
Is it equitable in your opinion, or is it disproportionately benefit higher income taxpayers?
I think it's a case-by-case basis, right? Agreed. So I think it's going to be who's going to benefit the most. It's going to be states that have, I would say, higher property taxes or state income taxes. They're going to benefit the most. And let's be honest, there's only 7 states in the country that have no state income tax. Most of them do, right? And so I do expect them to expand this because the majority of the country does have an impact on the state income tax level. Yeah.
So another question that came up was if they increase corporate taxes, how would it affect businesses and their ability to compete globally? I think it would be negative, such a negative impact if they increased it.
Well, so whether people like it, we still have one of the highest global corporate rates in the world. We do even at 21%, right?
Yep.
Is it the highest? No, but we have one of the higher ones. If we really want to incentivize companies to come here and operate, we've got to get our corporate tax levels down. If we want to grow the economy, if we want to increase job availability to people, and let's be honest, with the change in illegal immigration, the way it's going to be enforced, there's going to be a huge surge to bring natural citizens in to work. That's going to affect the bottom line because there's going to be an increase in wages on that. So prices are going to have to go up. But on top of that, if you're increasing taxes on top of that, now companies have to make a hiring decision. How many people can I afford to hire? How much am I going to be charging for things? And so we're going to have to balance that out.
We are. Will exempting tips and Social Security from taxation provide meaningful relief to workers and retirees? I'm going to go ahead and say yes, it is.
I absolutely think it will.
Yeah. I mean, look, guys, If you've ever worked in the restaurant industry, I know I did earlier on in my career, right? I can tell you that, you rely heavily on those tips because you're getting $2.13 an hour, right?
Yeah.
And so, you're really trying to rub two nickels together to figure things out in life. And so, when you give them that relief right there, you're really going to help boost that economy, those individuals that work in that industry.
Yeah.
And the same thing goes for people who are receiving Social Security. Like I say, it just has never, like you said, it's just never set right with me that we're taxing people on Social Security income that they've already paid.
Yeah. Look, I know a lot of this came out of Las Vegas. Trump went to Vegas. He talked to a waitress. Mm-hmm. She talked about it. And those people, let's be honest, they make a ton of money in Vegas because you have high tourism. People are tipping well there. But let's just think about the basic person that lives in the local neighborhood that's working at the restaurant. Mm-hmm. They're not getting $100 tips.
Nope.
Okay.
Nope.
They're living off of the $5 and $10 tips that people live, and they're not provided benefits. They don't get health insurance from their employers. They don't have a 401k. So they're paying taxes on these small tips, and the dollar's just not stretching as long for them. So if we can take away some of that pressure from a tax standpoint and allow them then to fund a retirement account, get health insurance, not only will it help those industries as well, but our economy becomes stronger.
Yeah. One last question, Rick, and then we'll wrap this up today. Are new wealth taxes or carbon taxes the right tool to address the inequality and environmental challenges?
No, I'm not really all that into the redistribution of wealth, and that's really what these are.
Yeah,
the carbon taxes is a redistribution of wealth, and the question is who's going to get them? Yeah. Right? Is another country going to get to come in and claim our carbon tax, or are we going to keep it in the U.S. and then how is it going to be redistributed here? Same thing with the wealth tax. Okay, so you want to tax a successful person for growing a business and being super successful with it, and take their money and do what with it?
Yeah.
And it's all fine and well to go, well, we're going to give it to the poor. It never works that way.
No, it never does.
It ends up in some politician's pocket. So let's be honest.
Yeah.
Let's be clear about what actually happens with these things. It never trickles down to the poor person. It stays in the government, and the government spends it.
That's right. Or they have these bullshit, monkeys doing cocaine.
Yeah. No. So they're great. They're great theoretical ideas that we could take this money and help the poor, and you absolutely could. Mm-hmm. It never works out in reality.
It doesn't. Well, look, guys, I hope all this was insightful for everybody. We've certainly enjoyed having this conversation, and if you have any questions on any of this, feel free to direct message us, give us a phone call, reach out to us. We'd love to help you. I think the thing that we want to communicate with you is we're a partner of you. We're an extension of you. And if you're looking for a tax advisor, if you're looking for a CFO, if you're looking for someone to help take you to that next level, that person has to understand, what your pitfalls are, what your pain points are, and work side by side with you. And I think that's one of the things that set us apart. And the fact that we stand behind everything that we do, Rick.
Yeah, absolutely. Yeah. We built this business solely on, taking the best practices for the companies that we'd worked for and saying, what did we like? What did we hate? Let's do what we liked and don't do what we hate.
That's right. So we just have much more of a personalized approach. But anyways, thank you guys for joining the podcast today, and we'll see you guys next week.
All right.